A very good afternoon to all my dear students. How are you all? So I hope you all are studying hard and you all are preparing well for your examinations. So today, students, we will be completing chapter number 10 and we are supposed to start with the topic prudential norms on income recognition, asset classification and provisioning pertaining to advances, right? So in the last session, we have covered till the various kind of mortgages, mode of creation of securities, whereby we discussed about mortgage, pledge, hypothecation, assignment, set upon, and lien, right? So now what are the various prudential norms on income recognition, asset classification, provisioning pertaining to advances, right? So this is one of the most critical area for an auditor when he's conducting a bank audit. So first of all, what is meant by the term NPA, non-performing assets? Students, we are on page number 10.27 of your module. Okay. So non-performing assets. So the asset is the advance that is given by the bank. The advance or the loan that is given by the bank is an advance to the is an asset to the bank. So an asset becomes NPA when it ceases to generate income for the bank. When it ceases to generate income for the bank, right? So what are the criteria? So an NPA with respect to loan and advance, and more specifically with respect to a term loan, with respect to OD, overdraft or cash credit limit, and with respect to bill purchase and discounted. So a term loan will be considered as NPA if the interest and or the installment of principal, it remains overdue for a period of more than 90 days. And the same applies with respect to bill purchase and discounted also. So the bills remain overdue for a period of more than 90 days. So the bill that is purchased and discounted, so it will be treated as NPA, and the same applies to term loan also if it is overdue for a period of more than 90 days, right? Overdue, what is meant by overdue? Let us just have a look at that also. So any amount due to the bank, so whether it is interest or principal, under any credit facility like term loan and the bills that we are discussing about, is overdue if it is not paid on the due date fixed by the bank. So if it is not paid on the due date fixed by bank, right? So if 90 days it is overdue, that is the date on which it was due to be paid, 90 days have passed, more than 90 days, then it will be considered as NPA in case of term loan and in case of your bill purchase and discounted, right? In case of your OD, overdrafts and cash credit, they will be considered as NPA if the account remains out of order in respect of what? OD and CC. So if it is out of order, here 90 days ka concept as such here is not required. Out of order, what is meant by out of order? So an account will be considered as out of order if the outstanding balance remains continuously in excess of sanction limit or the drawing power. So students, like after 10-15 minutes, we'll be discussing about sanction limit. We'll be discussing about drawing power, right? So if any of the account remains, the outstanding balance in the account, it remains continuously in excess of sanction limit and the drawing power. Sanction limit is what? For the purpose of understanding this clause, just try to understand that the total exposure with respect to a particular client that the bank can have, that is the sanction limit. And drawing power is what? Drawing power is the amount that the client can withdraw out of the total limit that has been given, right? So if the outstanding balance, that is the balance that is outstanding, that is to be paid by the borrower, if it is continuously in excess of your sanction limit or drawing power. So see, it should be within either the sanction limit or the drawing power. But if it is in excess, it will be considered as out of order. Second, though the outstanding balance is less than the sanction limit or the drawing power, but there are no credits continuously for 90 days as on the balance sheet date. So if this is the balance sheet date, 90 days prior to this, there are no credits to the account, be it on the part for interest or be it for principal repayment, right? So the first says that the outstanding balance, that is the amount that is to be repaid by the borrower, that is in excess of sanction limit and drawing power, or though the outstanding balance in principal operating account is less than the sanction limit or drawing power, but there are no credits continuously for 90 days as on the balance sheet date. And the third says that, okay, credits are there. So credits are there, but they are not enough to cover the interest debited during the same period. Then these accounts shall be considered as out of order, right? So your overdraft and CC, they will be considered as NPA once they remain what? Out of order. There is an example in your module. Let us just discuss that in order to understand this out of order wala concept. Just give me a minute. So that is on page number 10.27. Let us just quickly go to through that example. So out of order. So see, a A Limited has been sanctioned a CC facility by the bank for 50 lakhs, right? So the sanction limit is what? 50 lakhs. As per the stock statement furnished for the last quarter, the bank has calculated the drawing power to be 42 lakhs, right? In this case, account would be termed as out of order. So see, the drawing power is 52 lakhs. So the maximum amount that the borrower can draw is lower of what? Your sanction limit and DP. So it will be your 42 lakhs. So it will be considered as out of order if the outstanding balance remains continuously in excess of 50 lakhs or 42 lakhs, whatever the case may be. So whatever is the amount that can be drawn, if it is in excess of that, then it will be out of order. The outstanding balance in the account is less than 42 lakhs. So it is less than 42 lakhs, but there are no credits or payments deposited into the account continuously for 90 days as on the balance sheet date. So this is the second point with respect to out of order. And then, so this was related to first, then your second, and the third says credits. Let's say credits are say up to, let's say, 2 lakhs. However, the interest that is to be paid is 5 lakhs. So the credits are not enough to cover the interest that is to be paid for that period. Then it will become what? Out of order, right? Is it clear? Is it clear, students? Sunil Gangadev, Om Prakash Gupta, please tell me whether it is clear or not. Right? So an asset will be considered as non-performing asset when it ceases to generate income for the bank. And the cases are that in case of term loan, the interest or the installment of principal that remain overdue for a period of more than 90 days. The bill remains overdue for a period of more than 90 days in case of bills purchased and discounted. And in case of ODCC, the account remains out of order. And now what is meant by out of order we have seen, and what is meant by overdue we have seen that. Now once the account becomes NPA, the bank is required to provide provision with respect to that, right? So substandard assets, the categories of NPAs are substandard assets, doubtful assets, and your loss assets. So where the account has remained NPA for a period of less than equal to 12 months. Just a minute. So where the account has remained NPA for a period of less than equal to 12 months, then the provision of 15% is to be created by the bank, right? And where the asset has been categorized as substandard and it has remained substandard for a period of 12 months. So NPA for a period of less than equal to 12 months. Then if substandard, it has remained substandard category for a period of 12 months, then it will be considered as what? Doubtful assets. And in order to prepare, in order to provide provision, make provision with respect to doubtful assets, there are three subcategories. That is, if it is doubtful up to 1 year, then doubtful from 1 to 3 years and more than 3 years. Then two criteria are given, that is with respect to the secured portion of the loan, that is with respect to which security has been given. 25% in case of doubtful up to 1 year, 40% in case of doubtful from 1 to 3 years, and 100% in case of doubtful for more than 3 years. And unsecured portion ke liye to in all three cases it will be 100% provision that is required to be made, right? So what we have seen, that any of the account that has remained NPA for a period less than equal to 12 months, 15% provision is to be created. Any of the account that has remained into the substandard category for a period of 12 months, then categories of doubtful are doubtful up to 1 year, that is 25% with respect to secured, and unsecured is 100. Doubtful 1 to 3 year, 40% plus 100% for the unsecured, and doubtful more than 3 years is 100%. Loss asset provision is 100%, but let us just have a look at the loss asset, that is where the loss has been identified by the bank or the internal external auditors or RBI inspection, but the amount has not been written off wholly, right? So where any of the account has been considered as a loss asset by the bank or internal external auditors or the RBI inspection, then and the amount has not been 100% written off, then it will be considered as a loss asset and 100% provision is to be created, right? Now students, just a minute. So loss assets can be where suppose RBI inspection is there and they consider that it cannot be recovered. The party has become bankrupt. The borrower has become bankrupt. So 100% the amount is not going to come. So it will be considered as loss asset. Whose doubt was this? Om Prakash, Om Krishna Gupta, is it clear? Okay. Now, this classification as NPA, non-performing asset, this should be based on record of recovery as to when the principal or the interest amount has been received, whether that NPA criteria is satisfied or not, whether the criteria that we have just studied, whether it is satisfied or not, right? Now, when we have to consider whether a particular asset is NPA or not, we will not consider the security, whether that is available or not. So availability of security will not be considered. Neither the net worth of the borrower or the guarantor. But the focus area is what? The record of recovery. So the availability of security, the net worth of the guarantor or the borrower, that is not to be taken into account for the purpose of treating an account as NPA or otherwise, right? But what is to be considered? Record of recovery. And also, when the asset is to be classified, the asset classification is to be seen, that is to be seen borrower wise and not facility wise. So if Mr. A is having a car loan as well as a housing loan, and in car loan there is a default, however in housing loan there is no default. So facility wise means car loan, house loan, according to this. But borrower wise means that Mr. A has defaulted with respect to one particular service. So that means both car as well as housing loan will be considered as NPA. So all facilities, including investment in securities, that will be treated as NPA. Very, very important, this point, as well as that record of recovery. So with respect to this also, there is an example given in your module. Let us just quickly have a look at that example also. So page number 10.29, Mr. Raman has availed two loan facilities, a car loan as well as a housing loan from XYZ Bank Limited. He is regular in depositing housing loan EMI, but has not deposited the last four EMIs of the car loan due to paucity of funds. Hence, in this case, not only the car loan, But the housing loan would also be treated as NPA, although it is going good and there are no irregularity because NPA classification is borrower wise, that is Mr. Raman, and not facility wise, that is car loan and housing loan respectively. I hope it is clear, right? Now, with respect to the accounts which are regularized near the balance sheet date, what is meant by that? That as such, there were no flow or no repayments of principal or the interest, but near the balance sheet date, some credits has been there, right? So accounts regularized near the balance sheet date. So if few credits are there near the balance sheet date, those account needs to be handled with care without the scope of subjectivity. Why? Because it might be possible, let's say the bank manager and the borrower, they colluded and they want to, do not include that particular account in the category of NPA, right? So with respect to few credits near the balance sheet date, such account should be handled with care. And if auditor finds that with respect to particular account, there is inherent weakness based on the available data, inherent weakness means that the borrower might not be able to repay it, right? That account should be deemed to be NPA. So if let's say for the entire year there was no repayment, but in the month of March there has been two repayments. So it appears now that there is certain inherent weakness within this account. So the account can be deemed to be an NPA. So what is the duty for the auditor? So the auditor needs to check the sample transactions after the closing of financial year, because it might happen that if the transactions near the close of the year, they may be reversed during the first few days after the closing. Like we have the concept of sales, whereby inflated sales are shown near the year end, and after the year end they are shown as sales return. Same way here it can be possible that certain credits are there and later on the same is reversed once the year end is or the financial statements are closed, right? So the auditor needs to be alert to all such situations. Is it clear? Is it clear? So that we can quickly send in a reply so that I can proceed further. ठीक है. Now, with respect to government guaranteed advances. So first and foremost, if you have a look at the state government guaranteed advances, so the treatment of state government guaranteed advances will be same as we have studied with respect to NPA categorization. So these will be considered as NPA if they remain overdue for a period of more than 90 days for the provisioning purposes also, for income recognition also. So provisioning purposes is like in which category it is to be considered, asset classification, and how much provision is to be made. And income recognition is what? Whether the income can be booked on accrual basis or not, right? So state government guaranteed advances में these are to be considered as NPA if remain overdue for more than 90 days. So as such, there is no impact whether state government guarantee is received or not, right? However, in case of the central government guaranteed advances, so when I say that as such there is no impact, so what I mean to say is the treatment will be same as we do for the advances that are not guaranteed by the any of the governments, right? Central government guaranteed advances may, if the guarantee is not invoked by the central government, then the classification shall be as standard asset only. Why? Because the guarantee is not invoked. However, for income recognition, the same will be classified as NPA, non-performing asset. Clear? So with respect to the government guaranteed advances, central government guaranteed advances, if the guarantee is not invoked, it will be classified as standard asset. So with respect to what? Provisioning, right? And for NPA purposes, for income recognition purposes, it will be considered as NPA. With respect to state government guaranteed advances, it will be considered as NPA if it remains overdue for a period of more than 90 days for both the purposes, for provisioning as well as for income recognition, right? So the next topic now is what? Advances under consortium. So what is consortium? Basically, consortium bhi kehte hain, consortium is also there. So advances under consortium. So where to a borrower, two or more banks jointly they give loan by forming a consortium. So that is what is advances under consortium. So to one borrower, two or three banks come together and they jointly give a loan. So let's say to A Limited, a loan of 500 CR is to be given, but one particular bank cannot give such a huge loan. So let's say five banks come together, or you say four banks come together, one is giving 200 CR and the rest 300 CR is divided among the rest banks, right? So this is so logical now that in case of advances under consortium, there will be joint appraisal, whether loan is to be given, the credit worthiness, all those appraisals that are required, joint control and joint monitoring, and there will be what? Exchange of valuable information. Information available with one of the banks in the consortium will be shared with the other banks, right? And the bank which is having the highest share. So let's say one bank is giving out of 500 CR, one is giving 200 CR, rest all are giving 100 CR, right? So the one which is giving the higher share is the lead bank, right? And again, when the particulars bank, so let's say A Limited Co. XYZ, WXYZ, they have given a loan. Now, when WXYZ, they have to consider whether this particular loan given to A Limited, it will be considered as NPA or not for the purpose of asset classification. So it should be based on the record of recovery of the individual member banks. So respective banks will consider whether their record of recovery, right, from the party, right? So it might happen that in fact, it happens that let's say here W is giving 200 CR, XYZ, these are giving 100 CR. So W is the lead bank, right? So it might happen that all the remittances, all the repayments that are received from A Limited are pooled together, or everything is coming to W, and then W is parting away with the remittances. That is, then W is giving those remittances to XYZ. So the next point says that when all the remittances are pooled with one bank, so W Limited in our case, W Bank in our case, or the bank, and the receiving bank, it is not parting with the share of other members. It is not giving the share of the other members. Then in the books of the other banks, the accounts will be treated as not service for other banks and therefore to be considered as NPA. So basically the point is, the gist is that the banks have to consider their respective record of recovery if they have to see the asset classification of the banks, right? So the other banks need to arrange to get their share of recovery transferred from the lead bank, right? And the lead bank is responsible for computing the drawing power of the borrower and allocate the same to the other member banks, right? However, at the request of the borrower, the lead bank may allot a higher or lower share of DP to the member bank. So it basically says that the drawing part that is to be calculated by the lead bank, and then he'll allot that how much is to be given to particular members, like how much share it will be given to the particular member banks. However, the same can be changed at the request of the borrower, but who is going to change it? The lead banker, right? So this is with respect to advances under consortium. You can always get a 3 or 4 mark question with respect to this. So let us just have a look at it again. So it basically says that where the advancing of the loans to a borrower by two or more banks jointly is advances under consortium, and there will be what? Joint appraisal, control, monitoring, and exchange of valuable information. The banker with the higher share will be the lead bank, and in case of consortium advances, the asset classification should be based on the record of recovery of individual respective member banks and the other aspects. And where the remittances are pooled with one bank, or the bank receiving the remittances is not parting with the share of the other members, then with respect to that account, it should be treated as not service for the other banks, that is NPA. So the other banks need to arrange to get their share of recovery transferred from lead bank, And the lead bank is responsible for computing DP and then allocating it to the member banks. And at the request of the borrower, the share may be more or less at the request of the borrower. Clear? Is it clear? So quickly tell me, are these terms clear? Now is the topic. Om Krishna Gupta, Sunil Gangadev, they are saying clear. Others also please reply. So accounts where there is erosion in the value of security or frauds committed by borrowers. So let's say a loan of 100 CRB has been given and a security has been received with respect to this loan, but now the value of the security has been eroded, that is, it has been reduced, or there are frauds committed by the borrower. So in that case, what is to be done? So erosion is what? Gradual destruction or diminution of something. So here we are talking about erosion in the value of security. So see, students, in respect of such loans where there is erosion in the value of security or there have been fraud committed by the borrowers, so it is not prudent, it is not advisable to follow the stages of asset classification कि अभी तो 90 days हुए हैं और अभी तो it has been less than equal to 12 months for which the asset has been considered as NPA. So now, first of all, I'll consider it as substandard, then doubtful, and then the loss. But it says that it is not prudent to do that. Then what is to be done? The account should straight away be classified as doubtful or loss asset. Right? So, Om Krishna Gupta, you were asking about example of loss asset. So, listen to this carefully because this will fit into your answer to your query, right? So, it is not prudent to follow the stages of asset classification in case there is erosion in the value of security or there is fraud committed by the borrower. So what is meant by that? It is advisable to straight away classify such assets, such advances as in the doubtful or the loss asset category and thereby provide the proper provision for that. Now, an erosion in the value of security will be considered as significant if the realizable value of the security is less than 50% of the value assessed by bank or accepted by RBI at the time of last inspection. So the value that was accepted by RBI at the time of last inspection or the value that was assessed by the bank at the time of last inspection. So if from that value there has been a fall of 50%, less than 50%, so the realizable value is what? It is less than 50% of the value that was accepted by RBI at the time of last inspection or the value that was last assessed by the bank. So this realizable value is less than 50%. Then in this case, the erosion, the reduction shall be considered as what? Significant. And in such a situation, it will be classified straightforward as what? Your doubtful category, and provision will be made accordingly. So it will not happen that first it will be considered as substandard and then it will come as doubtful, but straight away it will be considered as what? Doubtful. Same way, if the realizable value that is assessed by the bank or approved by buyers, valuers or the RBI, and that assessed value is less than 10% of the outstanding amount in the borrower account. So whatever is the outstanding in the borrower account, the value, realizable value of the security is less than 10% of that balance, outstanding balance. In that case, the security that is available is to be ignored and that asset should straight away be considered as, it should be classified as what? Loss asset, and 100% provision is to be created. Is it clear? So the topic is related to what? Your accounts where there is erosion in the value of security or the frauds committed by borrowers, right? So it is not prudent to follow the stages of asset classification and straight away it should be classified as either doubtful or loss. Now, when will it be considered as doubtful? So when the realizable value of security is less than 50% of the value assessed by a bank or accepted by RBI at the time of last inspection, then it should straight away be classified into doubtful category and provision should be provided accordingly. Where the realizable value as assessed by the bank or the approved valuers or RBI, it is less than 10% of the outstanding in borrower account, the security, if available, any available, should be ignored and the asset should straight away be classified as loss asset. And in fact, the security that is available, because it says the realizable value of the security is what, less than 10% of the outstanding in borrower account. So that security should be ignored and straight away classifying it as lost asset, because that security now will not cover up for the principal and the interest amount, because the value of security is less than 10% of the amount that is outstanding, right? So either it should be written off or fully provided off in the books of accounts, right? Now, when there are, in case of advances against term deposits, national saving certificates, your Kisan Vikas Patra or your Indra Vikas Patra. So in these case, if any advances are there which are against the securities of all these things, right? So these accounts need not to be treated as NPA, provided adequate margin is available in the accounts. So if adequate margins are available, then in that case, such accounts need not be considered as NPA, right? Then the next is agricultural advances affected by natural calamities. So the advances that are given for agricultural purposes, if those are affected by natural calamities, so the RBI's master circular says that the banks may decide on their own what relief measures should be given, right? So banks, they have to decide on their own about the relief measures. What can be the different kind of relief measures? So see, natural calamities, for example, let's say flood is there. So agriculture advances are given to the farmers. So for in order to help them to harvest the crops or to grow the crops. But now since it is destroyed by natural calamities, so in that case, the RBI Master Circular says that bank have been given liberty that they can decide on their own what relief measures should be given to the farmers. So what can be those relief measures? Conversion of short-term production loan into long-term, reschedulement of repayment period, sanctioning of fresh short-term loans. But it should be as per the RBI guidelines, right? And where the terms of the loan are rescheduled, that is, let's say where short term is converted into long term or the repayment period is rescheduled, right? In that case, the NPA classification will be governed by the rescheduled terms. So the NPA classification, in order to see the whether the asset is to be classified as NPA or not, the rescheduled terms, the rescheduled period, the rescheduled terms of the loan, that is to be considered, right? Is it clear? The next is advances to staff. Quickly tell me, is it clear? Om Krishna Gupta, Sunil Gangadev. Good. Now the next is advances to staff. See, the bank may give advances to staff as a banker. So if an employee is there with the bank, so maybe the advance can be given as a banker, that is not in the capacity of the employer, right? Or in the capacity of the employer and not as banker. So here we are discussing these two things. So let us read this the second category. So where the staff advance is given by the bank as an employer and not as a banker. So the employee, the person, let's say Mr. A is there, he's an employee with XYZ bank. Loan is given to Mr. A where in the capacity of an employee, and here XYZ is acting as an employer. So in this case, the loan that is given, it should be included under the head others. So other assets it will come, right? However, where Mr. A is taking the loan as a public, right? And XYZ bank is acting as a banker, not as an employer as such. In that case, it should be included as part of advances portfolio of the bank. Logical? Now, there is one more point which says that, see, in case the loan is given to the employee in the capacity of the, or the bank is acting as an employer only. So, where housing loan or similar advances are given to staff. So, there the employee has an option that whatever repayment is done by the employee, the amount will be considered first towards principal, and later on it will be considered towards the interest payment, right? So it says where interest is payable after recovery of principal. So let's say for 4 years, the amount of principal is considered to be paid. So that means interest has not been paid, but it will not be considered as NPA. Right? So where interest is payable after recovery of principal, interest need not to be considered as overdue from first quarter onwards, because the loan is such that first the amount of payment is to be considered towards the principal and then towards the interest. So it will not be considered that the interest is overdue, right? Such loan and advance should be classified as NPA only when there is default in repayment of installment of principal or payment of interest on respective due dates. So as and when the principal and the interest will fall due, from that period they will be considered as overdue and NPA classification will come into picture. But otherwise, if the payment is first made towards principal and then towards the interest, then it is fine because the same has been given on this basis only. So tell me, is it clear? Advances to staff, we have seen three things. First is what? If it has been given as a banker, then it will form part of the advanced portfolio of bank. And if it has been given as an employer, then it will be included under subhead others under the schedule of other assets. And the third point is that if any of the payment has been done where the interest is payable after the recovery of principal, then interest need not be considered as overdue from first quarter onwards. Such loan or advances shall be classified as NPA only when there is default in repayment of installment of principal or payment of interest on the respective due dates. Is it clear? Now, with respect to agriculture advances. So, students, these are what? The various types of advances. And we are discussing about the various provisions relating to different advances. Like we have just seen the advances given to staff. Now is what? Agriculture advances. So the agriculture advances may be classified as long duration crops, so or short duration crops. So what are long duration crops? So the agriculture advances that are given for long duration crops. Students, we are on page number 10.33. So agriculture advances can be given for long duration crops or your short duration crops. So long duration crop is where the crop season is longer than 1 year. And the crops which are not long duration are to be considered as short duration. What is meant by crop duration? It is the period up to the harvesting of crops, and it is determined by the state level banker committee in each state. So according to the type of the crop, the state level bankers committee, they decide the crop season. Now, the asset classification with respect to the agriculture advances given for long duration crop or the short duration crop, we will be discussing that. You have seen that long duration crop is one where the crop season is longer than 1 year, and short duration is the one which is not a long duration crop. So less than 1 year basically, right? Now, the loans that are given for short duration crop, it shall be treated as loan. It shall be treated as non-performing asset if the installment of principal or interest remains overdue for two crop seasons. So whatever is the crop season, that is decided by state level bankers committee in each state. If the installment of principal or interest remains overdue for two crop seasons, And a loan that is given for long duration crop shall be treated as NPA if the installment of principal interest remains overdue for one crop season. Is it clear? Is it clear? Okay. Now there is a question in your module. So student, if you just look at this diagram that is given in your module with respect to NPA classification. So this is on page number 10.26. So these are the NPA loans, that is substandard, doubtful and loss category. You all we have discussed and now you all have understood. Then they are standard regular assets, advances of the company. And there are special mention accounts also, right? So we say that an asset will be considered as NPA if it is, we say, overdue for more than 90 days, right? And then if it is NPA in the NPA category, if it is NPA for less than equal to 12 months, it will be considered as substandard, right? And different definitions are there with respect to doubtful and loss. Now, there are certain special mention accounts whereby the accounts are showing stress signals, right? So let's say certain accounts can be those which are showing stress signals. So as such, they are not overdue for more than 90 days. So as such, they are not NPA, or the accounts SMA 1 category will be overdue between 31 to 60 days. SMA 2 will be overdue between 61 to 90 days. So 90 days have not crossed, so NPA तो हो नहीं सकता है. But there are certain stress signals, or let's say overdue between 31 to 60 days. 61 to 90 days. So there is one question as test your understanding in your module, which I understand that most of the students leave, right? But you should not leave this question. You should prepare yourself for each and everything that may come in your exam. So page number 10.34 page, just go through this test of understanding 3. So during course of audit of branch of a nationalized bank, you find that system has generated a report marking 10 loan accounts as SMA, special mention accounts. Discuss meaning of SMA accounts and significance of such a classification. Okay? So let me just take you through the answer that will explain you this concept behind SMA. So this is test your understanding 3C. Page number 10.60. So special mention account is an account which is exhibiting, which is showing signs of stress resulting in borrower defaulting in timely servicing of debt obligations, though the account has not yet been classified as NPA as per the RBI guidelines, because 90 days ka criteria has not been met, more than 90 days ka. So in the given case, 10 term loan accounts have been classified as an SMA. It means that there are overdues in the account for a period of 0 to 90 days. Since period of 90 days has not been exceeded on that date, such accounts have not been classified as NPA according to the RBI norms. तो NPA तो उनको consider कर नहीं सकते हैं. Such a classification is significant as early recognition of such accounts enable bank to initiate timely remedial actions to prevent potential slippages of such accounts into NPA. तो अभी तो NPA नहीं है, but हो ना जाए इसके लिए these are what early signals, so that the banks can take remedial actions to prevent potential slippages into the NPA category. Slippages is it should not slip into the NPA category. Clear? Is it clear? Right? So the diagram that is given on page number 10.26 is important. Just have a look at it again. This, okay? So standard, that is the regular accounts. NPA, you all know the provisions that are to be made. These are what special mention accounts, because more than 90 days has not happened. So overdue between 61 to 90 days, overdue between 31 to 60 days, and here accounts are showing certain stress signals. Is it clear? ठीक है. So now we'll be starting with the concept of drawing power. Computation of drawing power. See, so an important question. So in fact, in one of your last year papers, there was a question that what is meant by drawing power, what is meant by sanction limit, and what are the important point of considerations while calculating drawing power, right? So when any cash credit facility has been given by a bank or the financial institution to any of the borrower, then calculation of the drawing power is an important concept. So drawing power is the limit up to which a firm or company can withdraw from the working capital limit that has been sanctioned, right? So let's say if 100 CR has been sanctioned to a person or to a company, then it does not sanction the limit is what? First of all, let us see sanction limit also. So sanction limit is what? The total exposure that the bank can take with respect to a particular client for the facilities like cash credit, OD, export packing credit, non-funded exposure like your BGLC that we have covered in the last session. So the total exposure that bank can take, let's say it is 100 CR. So it is not, it does not mean that XYZ Limited, let's say with respect to XYZ Limited, they limit the sanction limited 100 CR. So it does not mean that XYZ Limited can draw 100 CR, total 100 CR at a go, right? So there is calculation of drawing power. What is meant by drawing power? Limit up to which a firm or a company can withdraw from the working capital limit that has been sanctioned, right? Now, this limit is calculated based on the primary security. We have studied primary and collateral security in the last session. So this is calculated based on primary security and the margin that is available, right? Now, while calculating the drawing power, all accounts, the considerations that are to be kept in mind that all accounts with respect to which such, with respect to which all such CC account, they should be kept within the DP and SL at all time. That is drawing power and sanction limit may at all the times. And in case the amount in respect of any such account that is outstanding, it exceeds the sanction limit or the drawing power, or it is against unapproved securities. So the securities given are unapproved as per the RBI guidelines or is otherwise irregular, the same should be brought to the notice of the management or the HOD regularly. Is it clear? So these are the considerations that are to be kept in mind, right? Now, what is the bank's duty? So the bank has to ensure that the drawings from the working capital account, it should be covered adequately by the current assets. So that is why the borrowers, they are required to give the current stock statement to the bank so that they can see whether the drawings that are there, they are adequately covered by the current stock against which the same has been, the CC limit has been given. Now, with respect to large borrowers, for them, the stock statement can be older for 3 months. That is not more than 3 months. But if 3 months purana stock statement is there, that is fine. But if it is older than 3 months, then it will be deemed as irregular. Clear? This is the bank's duty. Now, what is the auditor's concern? So all these stock statements that are provided by the borrower to the bank, the quarterly returns that are provided by the borrower to the bank, or the other statement that are submitted by the borrower, right? Or the audited annual report that is submitted by the borrower to the bank, auditor is going to scrutinize that. Scrutinize all these statements properly. And the statements that are received by the bank monthly stock statement, these are to be compared, and in case of any deviation, the reasons for the same are to be ascertained, for which the auditor may perform various procedures like inquiring or asking for confirmation from the third party. Is it clear? Now, when the DP is to be calculated, the drawing par is to be calculated. It is to be calculated as per the guidelines of the bank board of directors as agreed with by the concerned statutory auditor. So, the DP calculation should be as per the bank's board of directors guideline and it should be agreed upon by the concerned statutory auditors, and proper reporting of sundry creditors should be there. Now, what is meant by that? I'll just take you through this also. Sundry creditors का point अभी के लिए just leave. Now, with respect to the clients which are having the funded exposure, like with respect to which the bank is having the funded exposure of more than 5 CR. So the parties with respect to which the bank is having a funded exposure of more than CR. So the stock audit is to be carried by bank for all such accounts, right? So the stock audit is to be carried out by bank, which has given that CC for all the accounts having funded exposure of more than 5 CR. However, if the auditor require, the auditor may advise that stock audit should be conducted for other parties or other accounts also, right? And the in case suppose any such limit, working capital limit has for this also there is, let's say, certain consortium. So the branches shall obtain the stock audit report from the lead banker. The report that is submitted by the stock auditor. See what is happening here is bank is there. Bank is giving working capital limit, let's say to ABCD, A limited, B limited, C limited. So if the amount exceeds 5 CR, so it says that the bank's auditor, let's say central statutory auditor of the bank's auditor, so if it is exceeding 5 CR, so bank will get the stocks of all these parties audited, all these accounts audited. And if the auditor of the bank requires, he may ask the bank to get the accounts, other accounts also audited, right? Now, when such accounts are audited, the report is submitted to the bank. So these reports will be reviewed by the bank's auditor, right? So, and the bank's auditor, let's say statutory central auditor or the bank's auditor, he will focus on the comments of the stock auditors. So for all the clients whereby the stock audit has been conducted, with respect to that audit, when the report is furnished to the bank, the same will be reviewed by the bank's auditor. And if there are any comments of the stock auditors with respect to valuation of security or calculation of DP, the bank's auditor is going to have a special focus on that, right? Is it clear? Let us just have a look at this DP computation of drawing part from your module. So what is meant by drawing part? So it is an important concept for CC facility availed from bank or financial institution. It is a limit up to which a firm or a company can withdraw from the working capital limit sanctioned. Now, what is sanction limit? The total exposure that a bank can take on a particular client for facilities by like CC, OD, export, packing credit and non-funded exposure. DP is calculated based on primary security less the margin as on the particular date. What are the consideration? That all the accounts should be at all times within the limit of DP or within the limit of both DP as well as sanction limit. And the accounts which exceed the sanction limit of or the DP drawing power or are against unapproved security or are otherwise irregular, these should be reported to the management or the head office. What is the bank's duty? To see that the drawings are covered adequately by the current assets, and for that they will obtain current stock statement. With respect to large borrowers, the stock statement should not be older than 3 months, and if it is older than 3 months, the same is irregular. Auditor's concern kya hai? Whatever stock statement, quarterly returns or the other statements or the audited annual report that is submitted by the borrower, he is going to scrutinize that. And in case of any deviations, the same will be ascertained. That is, he'll inquire. Computation of DP may, it says that it should be ensured that DP is calculated as per the guidelines of the boards of director of the banks agreed upon with the concerned statutory auditors. And special consideration is to be given with respect to sundry creditors. What is that? We will just discuss. Stock audit means the stock audit should be carried out by bank for all the accounts having funded exposure of more than 5 CR. Auditors can also advise for stock audit in other cases. In the situation, if the situation requires, branches should obtain stock audit reports from the lead bank in cases where bank is not the leader of the consortium of working capital. The report submitted by stock auditor should be reviewed during the course of audit, and special focus should be given to the comments with respect to valuation of security and calculation of DP. Is it clear? So students, you may get a question with respect to this, that calculate the DP. So basically, okay, let me just take you through a question of your past year only in order to understand this. So see, this was a question asked in September 24. So compute the drawing power for, this is from a suggested paper, your RTP, right? So drawing your RTPs. So drawing power for cash credit account of Kirpa Limited for the month of March 24 with the following information. So the stock is 60,000, debtors are 55,000, your sundry creditors are 10,000, sanction limit is 48,000. Now debtors include debtors of 15,000 for an invoice dated 20th October 2023, and the margin with respect to stock is 30%, with respect to debtors is 40%. And it is given that debtors older than 3 months are ineligible for calculation of DP, right? So first of all, let us see stock में कैसे करना है. 60,000 is the stock amount, but out of this sundry creditors is 10,000. So we need for the amount for paid stock. So 60,000 less sundry creditors, that is, it is not paid for. So 15,000. And what was the margin? 30%. So 30% less kiya, you get the DP with respect to the stock, which is 35,000. Then total debtors is 15,000, 55,000, but out of that 15,000 is not to be considered because it is specifically mentioned. So the balance sheet date is 31st March 2024 for the month of March, it is saying, right? But this invoice is dated 20th October 2023. So this 15,000 will be deleted, right? Out of 55, 15,000 will be deleted. And the margin is what? 40%. So 40% is 16,000. The amount left is 24,000. So the amount that comes with respect to your DP calculation is 59,000. So here it says, so DP is coming as 59,000, but the sanction limit is 48. So you know that we have studied that all accounts should remain remain within the limit of what? Drawing power as well as sanction limit. So the amount will be what? 48. So the sanction limit given in the question is 48, whereas drawing power is 59. So drawing power would be restricted to sanction limit, which is what? 48,000. Is it clear? Is this question clear? So this is the format which is given in your module. So I've discussed a corresponding question of your last year's. Okay? So these were the important terms with respect to your advances. Now, audit of advances, what the auditor has to consider. Audit of advances. So students, see now, if you remember in our chapter number 5, whereby we did the audit of items of financial statement with respect to the assets, with respect to liabilities, with respect to income, and with respect to expenditure, we have done a number of assertions that the auditor checks when he's conducting the examination of the financial statements, right? So here you will see that more or less with respect to advances also, auditor is going to check all those assertions only, right? So in carrying out the audit of advances, so this is an asset for a bank. The auditor is primarily concerned with obtaining evidence about the following. So see, whether the amounts included in balance sheet in respect of advances which are outstanding at the date of the balance sheet. So whether these are outstanding as on the date of the balance sheet. So I can say whether these actually exist. So existence assertion. Advances represent the amount due. So this is again also one of the part of your existence assertion only. Amounts due to the bank are appropriately supported by loan documents. So one of the supporting document. There are no unrecorded advances. So I can say the completeness only. Auditor is checking the stated basis of valuation, right? So valuation assertion is appropriate and properly applied, and recoverability of advances is recognized in their valuation. The advances are disclosed, classified, and described in accordance with the recognized accounting practices and your statutory regulatory requirements. So this is nothing but your presentation and disclosure. Appropriate provisions towards advances have been made as per RBI norms accounting standard. This is again what your valuation. So let me just take you through the notes that I have prepared for it. ठीक है. So primarily concerned with obtaining the evidence with respect to the amounts outstanding, whether it is amount due to the bank. So the documents appropriately supported by loan documents, no unrecorded advances, valuation of advances, recoverability of advances is recognized in their valuation. The advances are disclosed, classified, and described in accordance with recognized accounting policies, practices, relevant statutory and regulatory requirements, and appropriate provisions toward advances should be as per your accounting standards, RBI guidelines, and the generally accepted accounting practices. Also, with respect to the advances, auditor will see he will obtain sufficient and appropriate audit evidence by study and evaluation of the internal control relating to advances, right? So internal control must be there that has been implemented by the bank. So auditor will study and evaluate such internal control. Auditor will examine the validity of recorded amount, the examination of loan documentation, reviewing the operation of accounts, examining the existence, enforceability, and valuation of security, checking the compliance with the RBI norms, carrying out the various analytical procedures. So more or less, these are what the various audit procedures that the auditor is going to perform. Okay. Now, students, with respect to the large advances, auditor is going to examine all the large advances, right? And if you remember, we have done in the last session also how to see whether an advance is large or not. So it depends upon all the advances, the total advances that the bank has given. We have seen an example from the module also. And other advances may be checked on sampling basis. Now, the advances which are problem accounts, there is some problem in those accounts that will be examined in detail unless such problem or that amount is insignificant. Also, the advances that has been sanctioned during the year, or with respect to the advances where there is adverse comment by RBI inspection team, concurrent auditors, or the bank's internal inspection, that is to be included in the auditor's review, right? So this is given on page number 10.37 of your module. So it says that, so in carrying out his substantive procedure, the auditor should examine all large advances while other advances may be examined on sampling basis. The accounts identified to be problem accounts, however, need to be examined in detail unless the amount involved is insignificant. Advances which are sanctioned during the year or which are adversely commented by RBI inspection team, concurrent auditors, bank internal inspection, these should be included in the auditor's review. Is it clear? Is it clear? Any doubt? Students, is there any doubt? So Rajat Thakur, the time is from 3 to 5:30. Now, with respect to evaluation of internal control over advances. Now we'll be discussing about, we have seen a pointer that auditor will study and evaluate the internal control. Now, what all points the auditor is going to consider when he's evaluating the internal control with respect to advances, right? So see, first of all, why will the auditor consider the internal control with respect to advances? Now, to you all know that in order to determine the nature, timing, extent of his substantive procedures with respect to advances, right? Now, when the bank is giving a loan, when a bank is sanctioning an advance, so auditor will see whether bank has implemented certain internal control and whether the same is operating effectively. So what can be various internal controls when the bank is giving loan? See whether the bank is checking the credit worthiness, the sanctions of the proper authority, right? Whether the documentations are completed before the advances are made, the terms of sanction, the end use for which the loan has been granted, whether that is ensured or not, whether sufficient margins are there or not, right? And this is to be ensured at regular intervals. If any security is given, right? For example, in the form of shares and debentures, whether the ownership has been transferred in the name of the bank, right? So all these are what internal control that the auditor is going to check, right? So we will see all these internal controls one by one. And why the auditor is going to evaluate the internal control? Because he has to determine the nature, timing, extent of his substantive procedures with respect to advances. Is it clear? So auditor will check the credit worthiness of borrower, sanction, and whether the sanction of appropriate authority has been given. So let me just take you through the module in order to just understand the language. So in general, the internal control over advances should include, inter alia is what? Among others, the following. The bank should make an advance only after satisfying itself as to the credit worthiness of the borrower and after obtaining sanction from the appropriate authorities of the bank, right? Then all the necessary documents should be executed before the advance is made. The compliance of terms of sanction and the end use of funds should be ensured. Sufficient margin should be kept, and this is to be ensured at regular intervals. Where securities are taken in the form of shares or debentures, the ownership should be transferred in the name of the bank. The securities, if securities, all securities that require registration, that should be registered in the name of the bank, or otherwise it should be accompanied by a document which is sufficient to give title to the bank. So either it should have been transferred in the name of the bank or some document whereby it is mentioned that the same belongs to bank, right? If any goods are taken in possession by bank, if remember, we have done pledge, right? So if goods are taken in possession by of bank, the contents of the packages should be test checked at the time of receipt. So let's say if the goods that are taken in possession, this is some, let's say, high value machinery, high value spare parts, like, or higher value some parts of a machinery that are been given. So the packages, the cartons that is having all that material, that should be tested at the time of receipt. And wherever the stock is, wherever all these packages are left, all these goods are kept, it should be frequently inspected by responsible official as well as by the inspectors of the bank. The drawing par register should be updated every month to record the value of securities that has been hypothecated, and the entry should be checked by the officers. Clear? The accounts should be within the drawing par or the sanction limits. The accounts which exceed the sanction limit or the drawing par should be considered as irregular, or which are otherwise irregular, they should be brought to the notice of the controlling authority regularly, right? Operation of each advance account should be reviewed at least once in a year or more frequent intervals in case of large advances. So these are the various internal control that the bank can implement and which the auditor is going to check whether the same has been implemented or not. So what is the purpose? Is the auditor required to give an opinion with respect to the internal control implemented by the bank? No, but the auditor has to determine the nature, timing, extent of his audit procedures. So that is why he'll evaluate the internal control over the advances. Is it clear? Is it clear? So this was with respect to the advances. Okay. And now the next topic that we are going to cover is on page number 10.38, which is audit of revenue items, profit and loss account. Section 29, subsection 1 of the Banking Regulation Act 1949. We all have studied in the earlier session also that the PNL should be in form B given by third schedule as per the section 29 subsection 1 of Banking Regulation Act 1949. So students, the income of the bank can be majorly the interest earned and other income. So let us just have a look at your module as to what can be the various kind of incomes of a bank. So the amount is so the topic is given on page number 10.40. So see, the interest can be interest or discount on advances at bills, interest income on investments, interest on balances with RBI, other interbank funds, and others. This includes any other interest discounts not included in the above heads. See, other income can be commission on bill for collection, or your commissions with respect to NEFT, RTGS, commission on LC, bank guarantees, loan processing fees, your mobile banking charges, rent from letting out of lockers, right? Your fee or insurance refill, brokerage on securities. So all these can be what? Part of income of a bank. Now, what are the points that the auditor has to consider while he audits the income of the bank, which can be interest income of various kinds, or your other income? So the next topic that we have to study is audit approach and procedures with respect to the income side item. That is, now we have shifted toward the P&L account. So we will do one thing. We will take a quick break of 10 minutes here, and after the break, we'll be doing your income and expense of the banks, the audit approach and procedures with respect to income expense of the bank. So we will take a quick break of 10 minutes, students. So, welcome back, students, after the break. So, we were doing the audit approach and procedures with respect to the income of the bank. Income can be in the form of interest earned, like interest discount on advances, bills, interest on investments, or interest on balances with RBI other interbank funds. And other income can be commissions or the fees, let's say for locker, for mobile banking fees, your loan processing arrangement or syndication charges, all those things. You can have a read at all the types of income that the bank can have on page number 10.40 and 41 of your module. So what are the various approach or the various procedures? What will be the audit approach and the various procedures that the auditor is going to perform with respect to the income? So the auditor's concern with respect to the income audit will be that he needs to obtain reasonable assurance that the recorded income actually took place. That is, it actually occurred, it pertained to the bank. So these are what occurrence assertion only. There is no unrecorded income. So I can say completeness and appropriate amount, that is measurement. So all your knowledge of chapter number 5, nothing new as such. So the auditor's concern with respect to the income of the bank will be, he will obtain reasonable assurance that the recorded income actually took place and it pertained to the bank. There is no unrecorded income and it is shown as the appropriate amount. Further, the RBI directions with respect to income is that if any income exceed 1% of total income, if the same is based on gross basis, or if it exceeds 1% of net profit before tax, if the income is reckoned or income is considered net of cost, in such situations, the bank is going to consider the income on accrual basis in terms of AS9, right? However, if any income is not material, that is not covered by this criteria, the bank may recognize it when the same is received, and with respect to such treatment by the bank, the auditor need not qualify their audit report in such situation, even if it is not done on accrual basis. Why? Because it is not material income. So it may be recognized as and when the same is received, right? Now, see, students, when we say that the income should be recognized on accrual basis, that is, there should be revenue certainty. When there is revenue certainty, the income can be recognized on accrual basis, that is, as and when it is earned, right? The essential condition for such revenue certainty is that it should not be unreasonable to expect its ultimate collection. So there should not be it should not be unreasonable to expect its ultimate collection. It will come. There is revenue certainty, right? And you all know that in case of banks nowadays, the interest income on advances is automatically generated through the core banking system, CBS system, right? Now, if there is revenue uncertainty, so if there is significant uncertainty, this if there is significant uncertainty with respect to ultimate collection of income in respect of non-performing assets, the bank should not recognize such income until it is actually realized. Why? Because there is revenue uncertainty, right? And students, very important, when any of the credit facility, any of the advances that is given for the first, that is given, and for the first time, the interest, for the first time, it has become NPA. That is, if any credit facility has been classified as non-performing for the first time, so the interest accrued and credited in the previous year, which is not realized, it will be reversed or it will be provided for. I'll repeat this point. When any of the credit facilities has been classified as non-performing for the first time. So if any income was accrued and credited in the previous year, why? Because earlier though it was booked on accrual basis. However, the same has not been realized and now the asset has been classified as NPA. So the amount of interest accrued and credited, it will be reversed or it will be provided for, and it shall apply in case of government guaranteed accounts also. ठीक है, very very important. So I'll repeat the revenue uncertainty and revenue uncertainty. So revenue certainty says that the essential condition to recognize the income on accrual basis is that it should not be unreasonable to expect its ultimate collection, right? And the interest income are as such automatically generated by the bank's core banking CBS system, right? Revenue uncertainty says that if there is any significant uncertainty relating to ultimate collection of the income arising out of non-performing asset, then in that case, bank should not recognize the income until it is actually realized. Also, where a credit facility has been classified as non-performing for the first time. So the interest accrued and credited in the previous year, though which is not realized, the same will be reversed and provided for in the current year, and the same will apply to government guaranteed accounts also. If you remember, we have done the provisioning with respect to advances against securities in the form of term deposit, NSC, IVP, KVP, life policies. So there we have said that if adequate margin is there, then they will not be, the income will be considered on accrual basis only, right? So same way, advances against securities of term deposit, national NSC, IVP, KVP or life policy, they shall be taken into account on due date, provided adequate margins are available, right? With respect to bills purchased, which are outstanding at the year close and the discount has been received, right? So if that amount is received for let's say 2 or 3 years, the same will be properly apportioned between the years for which the same has been received. And with respect to the amount that is received for a period beyond the year end. So let's say it is received for 2 years, then it will be apportioned between 2 years. So let's say with respect to this and with respect to this, let's say 10,000 is received for this and 10,000 is received for next year. So this 10,000 will be considered in this year and this amount will be recorded as other liabilities because it is in a way received in advance, but it is received for the next year. So this is with respect to bill purchased also, where the bank has purchased any bill and has rediscounted it with other financial institution, right? So in that case, the interest that is paid by the bank when it is getting it rediscounted and the interest that the bank is receiving when the bank purchased the bill, both such interest will not be netted off. Clear? Is it clear? So this was with respect to your bill purchase. Let me just take you through the module also for this. So bill purchased. In case of the bills purchase outstanding at the close of the year, the discount received thereon should be properly apportioned between the 2 years. Then the unexpired discount rebate on the bills discounted, where part of the receipt comprising the discount charges on the bill relate to the period beyond the year end. That is, it is not belonging to this year but to the next year, should be recorded as other liabilities. Interest component paid by the branch on rediscount of bills from other financial institution is not to be netted off from the discount earned on bills discounted. Is it clear? So this was with respect to bills purchased. Now the next point is relating to bills collected. So auditor needs to examine the procedure for crediting the party on whose behalf the bill is collected. So usually the customer's account is credited only after bill is actually collected from the drawee either by the bank or its agent. So with respect to bill for correction, auditor has to examine the procedure for crediting the party, and usually the customer's account is credited only after the bill is actually collected from drawee either by the bank or its agent, and the commission of the branch, it becomes when the bill, it also becomes due when the bill has been collected. Is it clear? So commission also, it will be due when the same has been, when the bill has been collected from the drawing. Is it clear? Then there can be income in the form of fees or commission relating to renegotiations or rescheduling of outstanding debts, right? So there can be what? There can be fees or commissions. So this is again what? Income earned by the bank with respect to renegotiations or rescheduling of outstanding debts. So with respect to such fees and commissions, these can be recognized on accrual basis over a period of time covered by renegotiated or rescheduled extension of period. So auditor will test check whether the same is done with respect to rescheduled extension of period. And for this, auditor is going to check it on a sample basis, right? This was with respect to renegotiations. Then there is a topic of reversal of income, right? So let's say any advance bill was purchased and discounted, and at the close of year, the same has been classified as NPA. So the amount of interest that has been accrued and credited in past years, the amount of interest that has been accrued and credited in past year. Why? Because accrual basis पे book कर लिया होगा before it becoming NPA. And if the same is not realized, it should be reversed or provided for, and the same applies to government guarantees also. This we have done earlier also. Further, with respect to any NPA, if any fees or commission is there, same way, if it ceased to accrue in the current period, the same will be reversed and provided for if uncollected. Simple. Simple. This we have already done. Now, two more points. This is with respect to reversal of income. It says that if the bank has wrongly recognized income in the past, and if it is recognized it in the current year, so that income that has been recognized in the past, that should be reversed. Very logical, right? And the next last point says that if there are large debits in the interest income accounts which are unexplained, auditor is going to inquire them. If large debits are there in the interest income account which are not been explained, auditor is going to inquire them. Also, if there are communications from the borrowers with respect to difference in interest charge, that there is a difference in the interest that has been charged, certain communications are there, certain mails or let's say any letters are there from the borrowers, auditor will inquire as to whether appropriate action has been taken or not by the bank. So this was the topic relating to what? Reversal of income. So if any advance including bills purchased discounted become NPAs at the close of the year, the entire interest accrued credited to the income account in the past period should be reversed and provided if the same is not realized, and it will apply to government guaranteed accounts also. In respect of NPAs, fees and commissions and other similar income. So fees, commission, other similar income in respect of NPAs that have accrued should cease to accrue in the current period, and the same should be reversed or provided for if the same is uncollected. Further, in case the banks have wrongly recognized in the past, should reverse it if the income is recognized in the current period. And last, the auditor should inquire if there are large debits in the interest income account that have been that has not been explained. It should be inquired whether there are any communications from borrowers pointing out differences in interest charge and whether appropriate action has been taken in this regard. Is it clear? So this is with respect to your reversal of income, right? Okay. So now students, next topics I will do from the module. These are very simple. See, with respect to the leased assets. ठीक है. If any component of finance income, that is interest, is there with respect to the leased assets, so again same, if the same was accrued and credited to income, but the same was accrued and credited to income before the asset became NPA, and the same is unrealized, and now the asset has become NPA, so it should be reversed and provided for in the current accounting period. This is the same point that we have done over also, but this is specifically with respect to the leased assets. With respect to the takeout finance, here in case of takeout finance, the record of recovery, if based on record of recovery, the account is classified by the lending bank as NPA, it should not recognize income unless realized from borrower or taking over institution, right? So if the account is classified by the lending bank as NBA, it should not recognize the income unless any payments, any receipts are there either from the borrower or from the taking over institution, right? Is it clear? On partial recoveries of NPAs. So first of all, it says that if there is any absence of clear agreement between the bank and the borrower, so there are partial recoveries in NPA. So it is not, there is no clear agreement that whether the partial recovery is towards the principal or the interest amount, right? So let's say for any of the account that has been classified as NPA, now there are partial recoveries. So let's say 1 lakh was your principal and 10,000 was your interest. Now partial recovery is there, that is, let's say 50,000 payment is there. So if there is a clear agreement that this is to be considered as principal, that this is to be considered as interest, then it is fine. But in case of absence of clear agreement between the bank and the borrower for the purpose of appropriation of recoveries in NPA, that is whether toward the principal or the interest due, in that case, bank is required to adopt an accounting policy to exercise the right of recovery in a uniform and consistent manner. So bank will determine, but it should be in a uniform and consistent manner, right? And the appropriate policy, what is the appropriate policy in terms of AS9? That when certainty attaches to realization and accordingly the amount is reversed or not recognized in the past, it should be accounted for. So now if the amount has been received, it will be accounted for. But one important point that is to be considered is that the amount that is recovered as partial recoveries, it should not be out of any fresh or additional credit facilities. So it should not happen that an account has been considered as NPA, and now as the example I gave, that let's say 50,000 has been received with respect to a loan of, let's say, 1 lakh and 10,000 was the interest amount, right? Now the amount has been received, but it should not happen that this amount is received out of a fresh credit facility, fresh loan that has been given to the same party. Is it clear? So if the amount is received, the same will be recognized as per AS9. If there is clear agreement, then according to that agreement, if there is no absence of clear agreement as to whether the amount is received towards the principal or the interest due, then the bank is required to adopt an accounting policy which should be a uniform and consistent. Right? Is it clear? Memorandum account, it simply says that with respect to the account that has become NPA and now you have reversed the interest, or further interest you are not going to consider. So where are you going to consider that interest for control purposes? Some account should be there now where all that interest is noted. So that is memorandum account, right? But the for the purpose of computing the gross advances, interest recorded in memorandum account should not be taken into account. So it says on an account turning NPA, bank should reverse the interest already charged and not collected by debiting the P&L account and stop further application of the interest, right? However, banks may continue to record such accrued account interest in memorandum account in their accounts for control purposes. And for the purpose of computing gross advances, interest recorded in the memorandum account should not be taken into account. Is it clear? Is it clear? ठीक है. Now, income from investments. So these three topics are left before we'll start with the topic of investments. So income from investments, interest income on investments, profit on sale of investment, profit and loss on revaluation of investment. So profit on sale of investments and profit and loss and revaluation of assets, it simply says that these are the part of banking activity. So investments are dealt in the course of banking activity. Hence, the net profit or loss of investment is taken to P&L account. Same way, revaluation of investments may also, it says that as per the guidelines of RBI, the investments are to be valued at periodical intervals, and whatever is the appreciation or the depreciation in the amount of the valuation of the investment, this should be recognized and taken to the P&L account. Simple, logical. The interest income of investment says that whatever investments the bank is having, whether in the form of government securities, bonds or debentures or other investments, on those investment, whatever interest and dividend will come, it will be considered as interest income on investments. So interest and dividend with respect to the investments in government securities, bonds and debentures or other investments, right? However, if the bank has invested in, if the bank is earning dividend from the subsidiaries or joint ventures, that will not be included in interest income on investments. Clear? So अगर subsidiaries or joint ventures से dividend है, that will be shown separately, not under interest income on investment. Clear? So this was with respect to income. Let us just quickly have a look what all we have done. So we have done section 29 subsection 1 says that P&L should be made in form B, third schedule, and this is the format. You can just have a look. Interest income, other income will come, right? Then your expenditure, net profit, your appropriations, then interest and other income, and then we saw the various audit procedures and the audit approach, right? I hope these topics are clear, students. Now we'll be starting with expenses. So the three major categories or broad heads with respect to the bank expenses can be interest expense, operating expense, provisions and contingencies. So we are on page number 10.45 of your module. So expenditure is to be shown under three broad heads, that is interest expense. So the deposits that the bank has taken, interest is to be paid on that. Operating expenses, provisions and contingencies. So interest can be like interest on deposits, interest on RBI, interest on balances with RBI or interbank borrowings. Sorry, interest on borrowings from RBI or the interbank borrowings and others. Operating expenses can be payments or provisions for your employees, the rents, taxes and lighting, printing, stationery, advertisement, publicity, depreciation. Then directors' fees, allowances, expenses, auditors' fees, expenses, legal expenses, postage, repairs, insurance, marketing, and other expenses, right? Provisions and contingencies can be provisions that is to be made for NPA or non-performing asset, provision for taxation, provision for diminution in the value of investment, provision for contingencies, right? So what will be the audit approach and procedures? Students, you tell me what you think. Just keep chapter 5 in your mind and try to write specific answers specific to bank expenses. So what can be the audit approach or audit procedures when the auditor is checking the bank expenditure? Quickly send in your replies. Om Krishna Gupta, Sunil Gangadev, Rajat, please reply. So interest rates, amount in saving and current account, interbank transactions. Others also please reply. So see, when the auditor is checking the interest expense, so the auditor is concerned about assessing the overall reasonableness of the amount of interest expense, right? He will analyze the various ratios. Tell me which essay comes to your mind after reading this. Overall reasonableness, analyzing the ratios, checking with the previous year. Students, concentrate on the question that I'm saying. This is one of the audit procedures, and a one specific dedicated essay is there with respect to this audit procedure. Overall reasonableness, analyzing the ratios, comparing with the budgets, comparing with the earlier years. Om Krishna Gupta, correct. Others also please reply. Others also please reply. This is essay 520, analytical procedures. Hai. So in carrying out the audit of interest expenditure, auditor is primarily concerned with assessing what? The overall reasonableness of the interest expense. So he'll analyze the ratios with respect to the different type of deposits and the quantum of respective liabilities, that is the various deposits, right? And if you remember in interest income also, this was mentioned that in modern day banking, entries of interest income is automatically generated by the CBS system. So same way interest expense is also automatically generated by the batch process in CBS system, right? So, so auditor shall obtain from the bank an analysis of various types of deposit at the end of the year, and auditor will calculate the weighted average interest rate. So based on the interest that is applicable and based on the various types of deposits, he'll calculate a weighted average interest rate and compare it with the actual average interest rate. And in case of any difference, if it is material, auditor will consider that. Simple. Further, auditor is going to compare the average rate of interest paid on the relevant deposits and compare it with that of the previous year. And again, in case of any material differences, the same will be analyzed, right? Further, the auditor is going to compare it with the benchmark stated. Benchmark is what? The budgets. So I can say here we can see a comparison with respect to the actual and the auditor's calculation. So I can say auditor's calculation, weighted average interest rate, right? Then comparison with the previous year, comparison with the benchmark is what? The budgets, right? Auditor, he will understand the process of computation of average balance and recompute the same on sample basis. So recomputation. And on test check basis, auditor will see whether the interest has been provided with respect to all the deposits. So basically on test check basis, auditor will verify the various calculations that has been done. And he will ensure that whether the interest has been provided with respect to all the deposits up to the date of balance sheet, that is completeness, right? Further, interest provided on all deposits. Then whether it is as per the bank's internal regulation, the RBI directives, that is the interest rates are in accordance with bank's internal regulation and RBI directives. Whether the interest on saving accounts are in accordance with the rules framed by the bank and RBI in this behalf. And the interest on inter-branch balances, whether these are at the rates prescribed by head office or RBI. So here we are talking about the interest calculation and then whether it is on all the deposits. The interest rate is as per bank's internal regulations and RBI directives. Interest on savings account is as per the rules framed by bank and RBI. And the interest on the branch balances is at the appropriate rates as prescribed by the head office of the RBI, right? Also, in case there is any change in interest rate on savings account and term deposit, auditor will consider that also. He will examine whether the completeness assertion with respect to the interest, that is the interest has been accrued on entire borrowing portfolio, right? He will recompute. So these are what? These are the various assertions with respect to your expense items, right? And ensure that the recomputed amount is tallying as per the books without any significant difference. Simple. With respect to the operating expenses, so quickly tell me without looking at the module, what comes to your mind that when the auditor is checking the operating expenses, what is the first thing that comes to your mind? Give me your answer based on your knowledge of chapter number 5. Quickly send in your replies. Expenses may, operating expenses may, if you have to check, the first thing that you are going to check as an auditor. Quickly send in your replies. Om Krishna Gupta, Sunil Ganga Dev, Rajat Thakur. So amount of expenses correct. But when you're conducting the audit, if you remember, I told you that with respect to income and expenses, and in fact, with respect to sales and purchases, auditor is going to check dash that has been implemented by the bank or the management. Correct. It is internal control, right? So for audit of operating expenses, the auditor should study and evaluate the system of internal control relating to expenses, including authorization procedures. And why? In order to determine the NT nature, timing, extent of his substantive procedures. Okay? In case any divergent, unusual trends are there in major items of expenses, auditor will examine that. And auditor may perform substantive analytical procedures, SA 520, like reasonableness of expenses, Hana, to the total expenses. So auditor will consider that, compare them with the previous year. Okay? And he'll check for the supporting documents and check the calculations wherever required. Simple. Hana, as such, there are no band specific points. These are the general points that the auditor is going to see with respect to audit of operating expenses. Now, with respect to provisions and contingencies, okay? So here the auditor is going to check the compliances with the regulatory requirements of provisioning, right? See, provision can be for non-performing assets. So the regulatory requirement, whether provision calculation is correct or not. And in order to understand that, auditor will obtain an understanding as to how the bank compute provision on standard assets and non-performing assets. So auditor is going to obtain an understanding, right? How the bank computes the provision. And auditor will ask for the classification of loans and receivables, and he may verify it on a sample basis, right? Auditor can ask for a detailed breakup of standard loans, non-performing loans, and the outstanding balances, and try to agree the outstanding balances with that appearing in the general ledger. Auditor will obtain tax provision computations from the bank management, because I told you know that provisions can be NPA के लिए, your tax के लिए, right? Examining other provision for expenses, the circumstances, whether provision is required, and the adequacy, that whether the provision so made, whether it is adequate or not. Is it clear? So this was with respect to audit of provisions and contingencies. So these are the interest income and the other income, and these are the various expenses. So interest income can be interest on discount bills, interest on investments, balances with RBI and other. And your other income can be commission, exchange, brokerage, profit on sale of investment, profit on revaluation of fixed assets. Your expenses can be interest expense, provisions and contingency operating expenses, and your interest expense can be interest on deposits, interest on borrowings, and others. Clear? With respect to the disclosure requirements of prior period items, so it says that Form B, that is given by third schedule as per the third schedule to Banking Regulation Act 1949. Actually, specifically, it does not provide for disclosure of the prior period items on current year's profit. However, if the bank has to consider that, it may give the disclosure if it wants. Okay? So as such, since the format does not specifically provide for disclosure of the impact of the current year's profit. Just a minute. Such disclosures, wherever warranted, may be given. Is it clear? Is it clear? Now, with this, students, we have finished the entire chapter, but I would like to discuss this case study and then the past year question. So go through this case study given on page number 10.51. Case study: CAM is conducting statutory audit of branch of MMC Limited. During the course of audit, it is noticed that students read, there are 5 paragraphs or 5 points that are given in this question, and based on these 5 points, there are 5 MCQs. Read these questions very carefully and try to give answers on your own without looking at the answer that is given on the back. So please read point number 1. So CAM is conducting statutory audit of branch of MMC Bank. During the course of audit, it is noticed as under. So loans under Kisan credit card are given by bank to farmers to meet their short-term credit needs for cultivation of crops. In respect of one agricultural advance classified under Kisan credit card having an outstanding balance of 20 lakhs as at the year end, there is no transaction in account since last 90 days. The said loan has been granted for cultivation of paddy, which is harvested in a period of 3 to 4 months from sowing. The branch has classified the said advance as standard asset. So read this slowly and carefully, and then read this question number 1. So I'll read this again. Loans under Kisan credit card are given by bank to farmers to meet their short-term credit needs for cultivation of crops. In respect of one agriculture advance classified under Kisan credit card having an outstanding balance of 20 lakhs as at year end, there is no transaction since last 90 days. The said loan has been granted for cultivation of paddy, which is harvested in a period of 3 to 4 months from sowing. That is, it is a short duration crop because it is not more than 1 year. The branch has classified it as standard asset. Now tell me whether, so what is the questions? First of all, as regards description of agricultural advance, which of the following statement is most appropriate in this regard? The branch has erred in making classification as RBI norm. It is a substandard asset. The classification made by branch is proper. However, there are no transactions in account since 90 days. It is SMA, special mention account. The classification made by branch is proper. The branch has erred in making the classification as per RBI norms. It is a doubtful asset. What is the classification made by branch? It has shown it as what? Standard asset. Quickly send in your replies. So Om Krishna Gupta is saying 1. Answer is C. Others also please reply. So see, this is a short duration crop because it says that the cultivation of paddy which is harvested in a period of 3 to 4 months, and with respect to a short duration crop, it will be considered as overdue. If it is overdue for, it will be considered as classified as NPA if it is overdue for 2 crop seasons. So as such, it is since last 90 days only. So not 2 crop seasons. Okay? So the classification that the bank has done is proper. So the answer is C. Read the second paragraph. It is also observed that account of one borrower availing cash credit limit of 50 lakhs was taken from another bank. The proposal was sanctioned by branch manager instead of immediate next higher authority as required in the manual of delegation of powers of bank. So in the manual of delegation of powers of bank, it is mentioned that it is to be done by some next higher authority, though the same has been done by branch manager, right? And it is for 50 lakhs. So now what is the question? Questions relating to second. Regarding taken over account from another bank, which of the following statement is most appropriate? It is an internal issue of bank and auditor is not concerned with it. It is an internal issue of bank, however, auditor may at his discretion report it. It is a serious violation of laid down procedures of bank for sanction of advances and should be reported by bank without fail. There is no issue involved as credit facility was properly sanctioned. Send in your replies. So with respect to second, Om Krishna Gupta, you are correct. So see, it says that the manual of delegation of powers of the bank. So these are internal rules, regulations of the bank. It should be approved by the next higher authority. So this is a violation of the rules or regulations of the bank. So it says it is an internal issue. Auditor should not consider be concerned, which is not correct. Then it says it is internal issue. However, auditor may at his discretion report it, which is not correct. There is no issue involved in credit facility, which is not correct. So the answer is C, which is it is a serious violation of the laid down procedures of the bank for sanction of advances and should be reported by auditors without fail, by the auditor without fail. Clear? The third point. It is noticed that head office of bank has flagged a savings account maintained in branch in which interest was wrongly paid at higher rate due to wrong data feeding entry. Okay. Now situation has been rectified by debiting excess interest paid in the account. So earlier certain amount was credited, wrongly paid a higher interest rate. So head office has flagged such account. Now, however, the reverse entry, that is debiting the excess interest paid in the account, has been done. Since there was little balance in the savings account, so the balance to meet up with that excess credit, so the balance was insufficient. A debit balance of 1.50 lakh was created in the said savings account due to above reversal. The matter was immediately informed to the account holder, right? However, the account holder has not turned up for payment since matter was informed to him, and about 6 months ago he has been informed. Clear? Now let us read this question with respect to this. As regards debit balance of 1.5 lakhs in savings account, which of the following is correct from point of view of the auditor? The situation does not attract RBI norms on asset classification. The debit balance of 1.50 lakh should be classified as NPA. The situation does not attract RBI norms on asset classification as no credit facility was granted. The bank cannot demand excess interest paid to account holder. So students, read the question carefully. So it basically says that wrong interest was paid at higher rate to a customer, for which the rectification was passed by debiting the excess interest paid. But since the amount that was available in the savings account is less, so now there is what? A debit balance of 1.50 lakhs. And the customer has been informed, but 6 months has passed and he has not deposited the amount in order to cover that 1.5 lakhs. So what is the correct option? So let us read. Situation does not attract RBI norms on asset classification. This is not correct. Why? Because 6 months have passed, right? The debit balance of 1.50 lakh should be classified as NPA. This appears to be correct, but let us see the next options also. The situation does not attract RBI norms on asset classification as no credit facility, but banks' funds are involved, na? Right? The bank cannot demand excess interest paid to account holder. This is not correct. So the debit balance of 1.50 lakh should be classified as NPA. So, Om Krishna Gupta, you have answered it correctly. Others also, please reply. Now have a look at the fourth question. Fourth point. There are many cash credit accounts in branch. Such borrowers are required to submit monthly stock statements to branch showing calculation of drawing power. Okay. So fourth question says, which of the following statements is not true about drawing power? So drawing power refers to the amount calculated based on primary security less margin on a particular date. So it says not true. It is always less than sanction limit. It can be different from sanction limit. Creditors for goods are reduced for purpose of calculating drawing power. So let me just see who has answered it. Om Krishna Gupta. So you have answered it correctly. Others also please reply. So with respect to drawing power, which of the following is not true? Drawing power refers to the amount calculated based on primary security less margin on a particular date. This is correct. So as such, this cannot be the answer. It is always less than the sanction limit. Let us see. This is not appearing to be correct. It can be different from sanction limit. This is correct. Creditors for goods are reduced for purpose of calculating drawing power. This is correct. So it is always less than sanction limit. It is not necessary. Right? So the answer is what? B. ठीक है? Now the fifth question. One borrower has availed a housing loan and a car loan from branch. Housing loan EMIs are overdue for 120 days as on date of balance sheet. Car loan EMI are overdue for 60 days as on date of balance sheet. So one borrower has availed housing loan as well as what? Car loan. The housing loan EMIs are overdue for 120 days. That is more than 90 days, right? As on date of balance sheet, but car loan is for 60 days, which is less than 90 days as in balance sheet date. So let us have a look at the options. So Om Krishna Gupta have answered. Let us see whether it is correct or not. Both housing loan as well as car loan should be classified as non-performing asset in accordance with RBI norms on asset classification. This was A. B says housing loan should be classified as non-performing asset in accordance with RBI norms on asset classification. However, car loan should be classified as standard asset. C says car loan should be classified as non-performing asset in accordance with RBI norms on asset classification. However, housing loan should be classified as standard asset. And the D point says both housing as well as car loans should be classified as standard assets. So students, I'm waiting for a reply. Very easy question, and this we have discussed earlier also as an example from your module. Quickly send in your replies. So see, two loans are taken with respect to one loan, that is housing loan में it is NPA because it is overdue for more than 90 days. Car loan is not overdue for more than 90 days. But we have seen that for classification of assets advances, the borrower wise facility is to be seen, not facility wise. So borrower wise means the borrower that is talked in the question, and not like car wise and house wise. So both the facilities will be what? Your NPA. So both housing loan as well as car loan should be classified as non-performing asset in accordance with RBI norms on asset classification. So this appears to be correct. Let's read the other options also. Housing loan should be classified as non-performing in accordance with RBI. However, car loan should not be. So this is not correct. Car loan should be classified as non-performing as per RBI norms. However, housing loan should be classified as standard. This is not correct. Both housing as well as car loan should be classified as standard. This is not correct. So the answer is A. Is it clear? Is it clear? Read these MCQs also. Correct. Om Krishna Gupta, correct. Now read this question. Which of the following, so these are the MCQs given on page number 10.53. Which of the following is included is in interest earned in profit and loss account of bank? Discounts on bill, loan processing fees, commission on bills for collection, credit card fees. Quickly send in your replies. Quickly. Yes. So it is discount on bills. This will be included in interest earned. Loan processing fees, commission on bills, credit card fees. This is what your other income, right? While auditing advances of a bank as statutory auditor, which of the following is not likely not likely a concern of auditor? Appropriate documentation of advances, ensuring budgeted targets of advances given by bank management, compliance of sanctioned terms and conditions, operations in advance accounts. So, which is not of a concern for the auditor? See, appropriate documentation auditor has to see. I'm reading the C point now. Compliance of sanction terms and condition, obviously auditor has to see. Operations in advance accounts, that also auditor has to see. But ensuring budgeted targets of advances given by bank management, this is internal matter of the bank, right? So that is not of the area of concern of the auditor. Any amount due to the bank under credit facility is overdue if, so we are talking about ODCC, remember? So it will be overdue if it is not paid on the due date fixed by bank. It is not paid within 30 days of due date fixed by bank. It is not paid within 60 days of due date fixed by bank. It is not paid within 90 days of due dates fixed by bank. Tell me what should be the answer? Overdue. So what is meant by overdue? If it is not paid on the due date fixed by the bank. Okay? Which of the following statements is true regarding appointment of statutory branch auditor of a nationalized bank? The appointment is made by bank acting through its board of directors with the approval of CG. The appointment is made by bank acting through board of director with prior approval of RBI. The appointment is made by bank acting through board of director with prior approval of ICAI. The appointment is made by shareholders in AGM. So we're talking about nationalized bank. We are not talking about banking company as such here. So let me just have a look at the answers that you have given. So Om Prakash Gupta, you have given the correct answer. So the appointment is made by bank acting through board of directors with prior approval of CG. No, the appointment is made by bank acting through board of directors with the prior approval of RBI. Right? The appointment is made by bank. No, this is not correct, and this is also not correct. Read the fifth question. Identify the correct statement. It is talking about the correct statement. So income from non-performing assets is recognized on accrual basis. Correct statement we have to see. Income from non-performing assets is never recognized. Income from non-performing asset is recognized on basis of actual recovery. Income from non-performing asset is recognized only when such assets are upgraded to standard assets. Quickly send in your replies. So I have received the replies. Let me just see. See, correct statement, right? So income from non-performing asset is recognized on accrual basis. No. Income from non-performing asset is never recognized. This is also not correct. Income from non-performing asset is recognized only when such assets are upgraded to standard asset. This is also not correct. So the correct answer is C, that is income from non-performing asset is recognized on the basis of actual recovery. Is it clear? Is it clear? Now just have a look at the past year question. So this we have already done. Read this. See. This is one of the past year questions. A Limited has availed cash credit facilities against stock and book debt, term loan for machineries and bank guarantees from Big Bank Limited. A Limited furnishes stock statement and age-wise list of debtors of two Big Bang Limited on regular basis. Concurrent auditors of Big Bang Limited mentioned about wrong calculation of DP, the concurrent auditors, by bank branch along with the sanction limit and balances overdrawn due to wrong calculation of DP in the monthly report. Now, see, just don't start writing after reading this. You need to read the entire question. Explain the meaning of drawing power, how it differs from sanction limit. So this is the first question. Sanction limit, this is the second question. What is to be ensured while calculating DP? This is the third question. Okay? So three questions are there. Explain the meaning of drawing power. So generally, it says that it is addressed by DP as an important concept of cash credit facility availed from bank and financial institutions. Drawing power is the limit up to which a firm or company can withdraw from the working capital limit sanctioned. Right? Is it clear? So the first point says explain the meaning of drawing power. So the drawing power is the it is the limit up to which the firm or a company can withdraw from the working capital limit that is sanctioned. How is it different from the sanction limit? So the sanction limit is the total exposure that a bank can take on a particular client for facilities like CC, overdraft, export packing credit, and non-funded exposure. On the other hand, drawing power refers to the amount calculated based on primary security and the margin on a particular date. Now, the third part is what is to be ensured while computing the drawing power. So, computation of DP may, it is to be ensured that it is calculated as per the extant guidelines promulgated by the board of director of the bank, agreed upon by the concerned statutory auditors, and sundry creditors should be given what adequate special consideration, right? So let us just have a look at one more question whereby you will be able to understand this sundry creditors wala point. Let me uh, just a minute. Meanwhile, students, you can send in your queries if any. So this is on page number, just a minute, of your 10.38 of your module. This calculation is really very important. So see, we are on page number 10.38. Quickly go through this. CAP is conducting stock audit of a borrower availing cash credit facility of 100 lakhs from branch of a bank. The CC facility is against security of paid stocks and debtors up to 90 days. Margin stipulated is 25% for stocks and 40% for debtors. The following information is available. Value of stocks included in above is 5 lakhs. So value of stocks is 125 lakhs. In that, fully damaged is 5 lakhs. Value of debtors is 50 lakhs. Value of debtors exceeding 90 days included in above is 10 lakhs. And value of creditors is 50 lakhs, right? So quickly tell me how you are going to calculate. So when we are calculating the DP with respect to the stocks, so the value of stock is 125, but out of this fully damaged will be excluded. So you are left with 120 and we want the paid stocks. So value of creditors. So when we say special consideration should be given to sundry creditors. So the creditors amount of 50 lakhs, it will be reduced. So 70 lakhs come out to be your value after considering creditors, and the margin that is to be considered is 25%, right? So it comes out to be 17.50. So the DP is 52.50 so far as your stocks are concerned. Now with respect to debtors, the debtors amount is given to be 50 lakhs, right? Out of these, it says that the debtors up to 90 days are to be considered, right? So value of debtors exceeding 90 days, including above, is what? 10 lakhs. So that shall be excluded. So it comes out to be 40 lakhs. And the margin that is given is 40%, which comes out to be 16. So it is 24 lakhs. So if you add 52.50 lakhs and 24 lakhs, that is your DP, right? And it says that CAP is conducting stock audit, CC facility of 100 lakhs. The cash credit facilities against security of paid stocks and this for is drawing par computed by CAP for 82.50 lakhs proper? So obviously it is not correct, right? Because the answer is 76.50, not 82.50. Let me just take you through the answer that is given on page number 10.59 also. So, let me just take you through page number 10.5. Just give me a moment. So, Om Krishna Gupta, your answer is correct. So, see. So, see, the value of stocks as on 31st December is 125 lakhs, but fully damaged stock is 5 lakhs. So, it comes out to be 120 lakhs. And we need paid stock. So, creditors, 50 lakhs will be reduced. Amount is 70 lakhs. Out of this, we have to keep a margin of 25%. So the drawing par as per stocks is what? 52.50 lakhs. Now value of debtors is 50 lakhs, but out of this exceeding 90 days. So it is mentioned in the question that 90 up to 90 days is to be considered. So 40 lakhs and the margin that we have to keep is 40%. So it comes out to be 16 lakhs. So the drawing power with respect to your debtors is 25 lakhs. So if you add, sorry, 24 lakhs. So 52.50 plus 24 is 76.50. However, the DP calculated by CAP was how much? It was somewhere around 82.50. So that is not proper. So the drawing power comes out to be 76.50 lakhs. So I hope it is clear. So what is your question, Om Krishna Gupta? Let me just have a look at the question again. So see, as such, sanction limit is to be ignored here. We have to calculate the DP only, right? And the question says that he has calculated the DP to be 82.50, whether that is correct or not. Is it clear? Om Krishna Gupta. Is it clear? Quickly send in your replies. So students, with this, we have finished our important chapter of audit of banks, chapter number 10. And I have told you in the last session that this chapter along with chapter number 9, they can come from like ranging from 12 to 18%, the weightage that is given to these two chapters, right? So very important chapters, and students have a tendency to consider this chapter specifically as technical, which it is not at all. And even if you look at this question of calculation of DP, this is really very, very simple. But yes, for all those who leave this chapter straight away, considering it to be technical or considering it to be a little bit, they may find it to be little bit maybe difficult. This is not the case, students. This chapter is really very, very simple. Very easy, because all your understanding of the earlier chapters, because ultimately it is the audit of the income, expense, asset and liabilities of a bank, right? Some specific topics are there with respect to your banks which are also very easy: types of banks, RBI as a regulator, your NPA provisioning. All these are really very very simple. So my advice to you will be, do not leave this chapter. You can always get a 4 or 5 or 3 mark question out of this chapter. And these are the chapters which student have a tendency to leave, but these chapters help you in your passing your audit exam with flying colors, right? So now students, in these revisionary classes we are left with the last chapter, chapter number 11, which is ethics and terms of audit engagements. Students, I know that SA710 is also left, but in the next chapter we have been given 2 sessions for the next chapter. So there we will get ample time to finish SS710 from your chapter number 8. So I'll take up that topic in the session schedule for chapter number 11, right? So now, as I always say that students, you should go through the module and you should finish up your syllabus ASAP. Do not keep on like piling on the things to be learned. That students tell me that we are going through the module, but we will learn later on. See, that later on will never come. So now it's high time you should learn also side by side, and we have completed the revision of 10 chapters in entirety except for one topic, which is SA 710, which I'll be taking up in the next session, that is on Monday, right? So hoping that you all are going to go through the module till chapter number 10 in entirety, including test your knowledge, including all your questions. Students, you must have seen today that a question relating to SMA, special mention accounts, is there in test your knowledge only, right? So as such, in the chapter there is no explanation. So you must to consider these test your knowledge, MCQs, case studies that are given in your module as important as the other content that is given in the chapter, and you must go through these questions thoroughly, right? So thank you for being patient listener, and thank you for making this session interactive. Hoping that in the next session that is scheduled for chapter number 11, you all must have done till chapter number 10. Done say, I mean, you all must have gone through the module, as well as you all must have learned the keywords or the entire chapter, right? So thank you and bye bye for today. See you on Monday.